Hello guys, so this is going to be a long video because I'll be running you through how I do my top-down analysis. That is my top-down approach whenever I come to the market. And for now, I basically look out for these pairs. I look out for the dollar index. I also look out for GBPUSD and also the EURUSD, and then GBPJPY and EURJPY. So, and one thing I want you to know is that I want you to stay close. This video is going to be a long video because I want to take it slowly so that you will understand how I do the top-down analysis. And also, you see I have GBPUSD and also EURUSD. So these pair are positively correlated. And also GBPJPY and EURJPY are positively correlated. So I look at this pair. That means when I look at GBPUSD, I also look at EURUSD. If I look at GBPJPY, I look at EURJPY. So these are the terms, or these are the concepts I will be using when conducting my top-down analysis. I will be using this term frequently. You heard me saying external range liquidity, internal range liquidity, fair value gap, change in the state of delivery, breaker block, mitigation block, and we also have the SMT divergence. We have SMT divergence. So you will hear me use these words frequently when carrying through the top-down analysis. So this is the dollar index, and I've told you before we look at the foreign currencies, we have to also look at the dollar index because the dollar is negatively correlated to the foreign currencies like GBPUSD, EURUSD. And now we need to analyze the dollar for us to know the direction of the other foreign currency because they are negatively correlated. What does that mean? It means that when dollar is bullish, EURUSD or GBPUSD will be bearish. So let's analyze the dollar before looking at the other foreign currencies. Now, this is dollar on the weekly time frame, and for quite some time we have been bearish. What does that mean? We see price being bearish. That is price creating higher high, higher lows. But our focus is not higher high, higher low. I want you to look at something. Let's view it in terms of internal and external liquidity. For example, here we see price is at internal liquidity here, which is the fair value gap, and then we see price tap into the internal range liquidity, and then we have the external range liquidity here. Do you see it? We have another internal range liquidity, you see, and then price came to it after taking out the external liquidity that it is at this level. But what dollar has done currently, I want us to look at something here. You see, price moved from internal to external and external to internal. What do we have, guys? We see that price came into the internal range liquidity, and then price has taken out the external range liquidity. But we are not supposed to be panicking, seeing that price has taken out the external liquidity in terms of, although we are expecting price to take out the inter-range liquidity. But how do we know that price is going to take out the inter-range liquidity? We need to find one, or we need to see one in the price action. And this inter-range liquidity should be an imbalance or fair value gap. So here, what do you see? We don't have fair value gap or imbalance. And on the weekly time frame, we see price has taken out the external range liquidity. But the question is, do we have any significant, direction that the market, or a sign that the market is going to be bullish? No, we don't have for now. Because what do we see? We see last week, price, the week before the last week, that is prior week before last week, we see price, sold and then reject, and then we see price open here and then reject down, taking out this old low, which was the target. We targeted this. I've shared this too in my, public group on Telegram. So we see price as taking out this, old low. But should we be expecting price to be buying? No, because we haven't seen a sign that price will be buying on the weekly. Now we have taken out external liquidity. What do we need to do? We need to see sign that the price will be buying. For example, at this point here, what do you see here? At this level here, we see that when price take out this external range liquidity, do you see it? We see price taking out this external range liquidity here. When price took it out, found support at this fair value gap. This is a fair value gap. Then we see price creating a 3-candle pattern. As soon as we see this 3-candle pattern on the lower time frame, it tells us that we have a market structure shift. But here, do we have a 3-candlestick pattern? No. Should we see it this week? It might be. It is a probability. But right now, as we speak, we should still be what? Having the weekly time frame to be bearish in our journal. Reason because we have not get any 3-candle pattern after external liquidity has been taken. Because price moved from internal range liquidity to external range liquidity, and from external range liquidity to internal range liquidity. So here we see the external range liquidity being taken out, and we're expecting price to go into the internal range liquidity. And in this price leg, we don't have internal range liquidity in the what? In the weekly time frame. So for us to see price moving, bullish on the weekly, we need to see a 3-candle pattern like this: candle 1, candle 2, and then candle 3. But here we have candle 1, candle 2 without candle 3. Maybe this week we will see a candle 3. So far we are what? We are bearish on the dollar based on this weekly price action. Even though we see price rejecting, we are still bearish. So let's go to the daily time frame. Let's look at the daily time frame. So on the daily time frame, what do we see on the daily time frame, guys? We have, this is the internal range liquidity, that is the imbalance on the weekly, and we see price came into it. But on the daily now, we need to look at internal and external also. What do we see here? We see price taking out this what? This external range liquidity. We see here price taking out this swing high, which is external range liquidity. And at the same time, price is finding support inside an internal range liquidity. Do you see that? This is an internal range liquidity. What do we be expecting? We should be expecting what? External range liquidity. We see price has taken out this external range liquidity. Now, throughout last week and week prior to the last week, we see price created an imbalance here, and then price, closed below the imbalance and then found support at the imbalance. Now, had it been, price, a candlestick close above this imbalance, do you see it? We would have been bullish last week, but looking at this target here, which is the old low, and being external range liquidity, I was expecting price to take it out. However, there was this SMT that was, provided here between the dollar and the foreign currencies, GBP, USD, and so on. We see price creating an SMT divergence here. But because there is no shift in market structure on the weekly or daily, there's no shift in market structure, I was not expecting price to go bullish. And provided that this is a line of defense, this fair value gap has not, price has not closed above it. So I see this as a bearish condition. So last week we see price again taking out what? An internal range liquidity. You see price is finding support at this internal range liquidity, and external range liquidity has been grabbed. And also, we see this overall external range liquidity has been grabbed. Now, the question is, if you look at this, what do we see? External range liquidity taken. Let's put it here. External range liquidity taken. What do we expect? We expect to see price going into the internal. And on Friday, we see price tapping into the internal range liquidity after taking external range liquidity. Now, where is our line of defense? Our line of defense is this fair value gap. If this fair value gap, if price close above this fair value gap, then we might be bullish. But as far as price respect this fair value gap, will remain bearish. Following what? Following the weekly time frame. So we have explained external range liquidity and internal range liquidity as well as fair value gap. Now, the next thing is what you need to consider is that you need to consider what we call SMT inside what? Inside imbalances. SMT inside imbalances. What do we have here? We see this fair value gap here, and price came into it. Now, providing that price has taken out this old high on the what? On the dollar. So when we go to the foreign currencies like GU, you find out that price hasn't taken out this high, and price is at the institutional reference point, which will provide us with what? With an XMT. So right now, what I'm expecting on the dollar, I want to see price now either selling right from this level down, or I want to see price, tapping into the fair value gap, taking out this previous day high, which is the Friday high, for us to continue lower. And however, if price, take out this fair value gap, that's the imbalance, and we see price closing above it, at the same time, we see an SMT after price close above it, then we'll be targeting this relative equal highs on the what? On the dollar. So this is what we have on the dollar. So let's go to the foreign currencies like EU and GU to look at these trades. So this is EURUSD on the left, and this is GBPUSD on the right. And we said we look at internal range liquidity to external range liquidity, and then we look at in the internal range liquidity, we want to see fair value gap between the two correlated pair, which is, for example, GBPUSD or EURUSD. So here is the EURUSD, and we see price created an internal range liquidity, and then we have what we call the external range liquidity. Price took out the external range liquidity, and then created inter-range liquidity. Price came into the inter-range liquidity, and then we see price taking out the SR-range liquidity. So currently, what do we have? We see price taking out the SR-range liquidity. But I want to explain something to us that happened last week, which will inform our top-down analysis. So here on the both pair, what do we have? We see that we have an internal range liquidity here, and we see price came into it, the inter-range liquidity, tap into the inter-range liquidity, and then here we also see price tapping into the inter-range liquidity on the GBP USD. Here is it, inter-range liquidity, and then this SR-range liquidity was created. This candlestick, if you look at it, is on 19th May. If you look at it below here, it's on 19 May. And then this candlestick on the GBPUSD is on 19 May. So here, when this candlestick was created, we see a fair value gap. Here there wasn't a fair value gap on Euro, but there is a fair value gap on GBPUSD. So the moment a fair value gap is created, we're expecting the price should come into it, but price here did not come into the fair value gap in the weekly time frame before taking out the SR range liquidity. But here, what do we have? We see price, balancing this fair value gap and then continue bullish. So here on the weekly is what is bullish as of last week because dollar is bearish. So, but when we go to the daily time frame, it gives us more detail on the daily. Now, on the daily, what do we see? Both pair on the daily, we see that here, this was the fair value gap area, and these three candles are supposed to be an imbalance, but there was no imbalance. But here, price created an imbalance on the daily. As soon as there is this imbalance, we're expecting that price should come into the imbalance as inter-range liquidity, and I said we should look out for SMT. Here, what do we see? We see price creating a lower low, and then here price created a lower high. So there was an SMT. So this gives us an indication that price is going to continue bullish, provided that price is currently at an institutional reference point, which is the fair value gap, and there is SMT. So last week we see that price, took out this SR range liquidity. Now, even though price has taken out the SR range liquidity, do we have a market structure shift on the daily? No. So this week, what are we expecting? We're expecting price to continue bullish. Why? Because we see that on both pair on the daily time frame, what do we have? We see that price has created an imbalance on the euro, and there is no imbalance on the GBPUSD, but there is something at the imbalance. You see price is creating SMT. Do you see it with this candle? This candle low was not taken on euro, but this candle low was taken on GBPUSD. Remember, on dollar the candle low was also taken, and what do we have? We see a fair value gap, which is inter-range liquidity, but price did not enter into the fair value gap. Meanwhile, on the GBPUSD, we're supposed to have a fair value gap, but we don't have a fair value gap, but we have an SMT, which coincides with this fair value gap. So with this SMT, we know that price is going to continue bullish. But there is one confusing thing. Why? You see there's an SMT on the euro between Thursday and Friday last week, and also SMT on the GBPUSD. This is making lower high and this is making higher high, and a lot of people sold here, but the narrative is bullish, and that is why this SMT doesn't matter, because the narrative is bullish. And on this daily, we can see that we're still expecting price to should continue bullish. And what am I expecting coming week? I'm expecting that price should open. Price should open, tap this level, and then go bullish, taking out SR range liquidity. And on GBPUSD, I want to see the same thing. Price tapping this level and then going bullish. On the 4 hours time frame, we will see more detail. Let's go to the 4 hours time frame. So this is the 4-hour time frame. What do you see? We see an SMT, and then we see what? We see price closing above this candlestick. We have a 3 candle pattern. So, and already this candle has shown us that yes, we can start what? We can buy. So I'm expecting as soon as price open, I'm expecting to see price, going bullish. Yes. I'm also expecting to see price going bullish on the what? On both foreign currencies, because dollar is what? Is bearish. And on the 1 hour time frame, what do we have on the 1 hour time frame? On the 1 hour time frame, we can see that we are already what? Price is already at a breaker block. So what are we expecting? I'm expecting to see price going bullish from this level. Yes. I want to see price going bullish. Yes. This is what I want to see. I want to see price going bullish. Yes. So even on the GBPUSD, we can see price is at this breaker block. I want to see price going bullish. So here, we can see here, I'm coming. So we can see here, price should go what? Bullish. So this is what we have on the what? On GBP and EURUSD. So for, GBPJPY, let's go to GBPJPY. On GBPJPY and EURUSD. Sorry, EURJPY. So on these currencies, these 2 currencies, what do we have? We start on the weekly time frame. So on the weekly time frame for both GBPJPY and EURUSD, we see that on the weekly time frame here on GBPJPY, we see that price is already at the what? At the breaker block here, because we see a low has been taken. And we see price has closed below this high. So we have a breaker block and price is on it on the weekly. There is no much detail. Here on EURJPY, we also have, price. The same thing we see here. Price is what is also bullish, and price is sitting on this other block here. So we are expecting bullish prices on the weekly. So on the daily time frame, we have more details. So here, look at what do we have. We said external, internal. What do we see? External liquidity has been taken. And then what do we see here? We have what? Inter-range liquidity in the form of fair value gap. And then inside this fair value gap here, on EURUSD here, what do we see? We have an SMT here at this level. Price is making higher low, while here price came into this other block because there's no fair value gap here, and we see price making lower low. So there's an SMT, and then we see price taking out the external range liquidity last week. So price from external, we see price coming into the what? Internal range liquidity here in form of this other block, and we see an SMT divergence. And here on the what? EJ, that is EURJPY, we see an SMT divergence with what? Inter-range liquidity. Remember, I told you any one of the PM can have a fair value gap. Meanwhile, the other might not necessarily have the fair value gap, but at the fair value gap of either of the two, look out for SMT. And here we have a fair value gap and we see an SMT. Here we don't have a fair value gap and we have an SMT. So price is going to be bullish, targeting what? This external range liquidity, as well as targeting this what? External range liquidity. Why? Because there is a pool of liquidity here, because retailers are seeing what? Are seeing support here, because a high here, another support, 3 levels of support. So they're seeing a support and they're selling. Meanwhile, we will be buying. So this is what I will be expecting coming week. This is the week of 16th. The week of 15th to 23rd. to 24th. So this is what I'll be expecting. I'll be expecting price to be bullish. So guys, if you find this video helpful, kindly subscribe and also put your comment where you don't understand or any concept you don't understand for me to do a video for you. Thank you. Bye.